All right, everybody, thank you very much for joining us on our our Monday Zoom and Learn. My name is Tommy Dutch. I'm the area sales manager for California Title. And today is our week 2 of seller financing of a 3-week series. And we're hoping you guys will come back each week because otherwise you're going to miss a lot. And if you haven't done so already, please subscribe to the channel where we store all these trainings for you each week. I think we have now over 100 different trainings for you. So my co-host, Mary Jane Morris, would you like to introduce yourself, your team, and also our guest speaker and trainer today?
You bet. Hi, everybody. I'm Mary Jane Morris. I'm the sales manager and the VIP service coordinator for Escrow Spectrum. We have we have staff in 3 counties: Irvine, San Diego, and Temecula. And all of us are senior escrow officers with lots of experience. And we are happy to be with you today. For the last 60 days or so, I've been getting an enormous amount of calls about seller financing again, people wanting to try lease options. I mentioned in a previous meeting that we had 3 people walk away from loan docs signing at escrow because of sticker shock. No, they were at that moment, we were at 7 plus, their impounds and all that sort of stuff. We actually had them walk away from the table. So I noticed that when this happens, it's time for me to get out there and let you guys know what your options are. Seller financing is a real option. It is legal. It is ethical. It is, as I've mentioned in a previous class, we don't see a lot of it because we're in California. It's not as hard to move properties in California. We'll talk a little bit more as we go through the class about what the parameters are when you're running searches and things. But for this moment, I'd like to introduce, before I get to our host, our guest today, Andrew Wertheim. He's our estate and business law attorney, takes real good care of all of us, always has time to take a moment and listen to what's going on in your life and help you move on. So Andrew, we're happy to have you here today.
Thank you, MJ. Yes, obviously I'm an attorney, and any estate planning, trust, probate, trust administration, or business law questions, I want to be a resource to everybody here. I'll quickly put my phone number in the chat, and then I'll be quiet, and I'm very excited for today's presentation. Thank you.
Awesome. So I also want to, although she's not on camera today, Linda Bacon, one of our senior escrow officers, is listening in because I've been torturing her with seller financing as well. So she's keeping up with what I'm telling everybody. Now, without further ado, I'd like to introduce Steve Gronlund, from the broker owner of and loan officer of Vintage Mortgage. In about 2010 or 11, I was managing Century 21 Right, and he invited our group to come in and hear a lease option AITV class. I have never heard it done better. I was able to immediately apply it, and it felt very usable. Happy to have him have a time for us today. I reached out to him a few years ago and had him teach this live in our offices prior to COVID. I just reached out again and reintroduced myself, and I'm still taking my calls at this point. Good morning, Steve. We're grateful to have you. And why don't you tell us about yourself and what you'd like to talk about today?
Hi, guys. I'm going to talk about the lease option with you a little bit. I've been in the mortgage business for 31 years. I've done personally over 6,000 mortgage loans. That's not including other loan officers in my company. And well, we've done a lot of work together, and things have grown and changed. And one of the things that I've done as a process of my business, as a way to generate business for myself and my company, is I did all these workshops all over Southern California. In fact, all over California. I started doing this when I was in the Central Valley as well, and created different workshops. And I used to do them at the Board of Real Estate offices. And since then, and since COVID, we've kind of gone inward, and we're doing less of the live workshops and more of them online. I just give them away for free. For me, it's more about relationships. This particular workshop is all inclusive. Alternative purchase options, which covers lease options, all inclusive trust deeds, and land contracts, and pretty much anything and everything, because everything is covered by those three. Understanding those three things. I started doing this, geez, almost 20 years ago, when I expected rates to go up, and they never did, huh? They never went up until now. Now they're going up, and now this program is making more and more sense. This program, all these alternative purchase options weren't all that important since haven't been that important since the Jimmy Carter administration. After that, rates have gone steadily downward, not upward. And back then, when interest rates were 19%, if somebody could somehow take over the underlying loan in one way or another through one of these ways, it was going to be a huge difference for them. So that's what we teach. And I went so far as to get the entire program reviewed by John Giardinelli of the Giardinelli Law Group. In the beginning of the program, the several-hour workshop, he actually gives a little promotion to it in the very beginning. So that's a little bit about us. I'm obviously looking for great relationships with great real estate agents, and we have some incredible follow-up programs. So you want to get started?
Yes, we're ready.
All right, everybody. How many people we have online today? Looks about 20 or 30 people.
Yeah, we're sitting just over 20.
Okay. All right. So I'm going to share my screen with you if I have permission to do that.
Absolutely.
All right. And you guys can all see it?
Not yet.
Now you can?
Yep, it's coming up now. There we go.
Is it white with black letters?
Yes, it is.
Is this black with white letters? Okay, so I have a serious eye problem, so I can't see white with black letters. It really gives me a headache hard. So I'm going to do this in black with white letters if it's okay with everyone.
Sure.
And because this is designed to be on a big screen and I'm talking in a podium, so when I'm looking at the computer, it's a little harder. Plus, I think everybody sees a little better when it's black background and white letters. Of course, we talk about what goes around comes around. This is true. Again, when these things were popular, they were really popular, and then they disappeared, and now they come back again, and they will come back again in the future. So be aware of that. And as time goes on, you just got to understand, you got to learn a lot of things about the mortgage business. It's also important to understand the U.S. has experienced these same types of financial problems, a lot of times. This is the 7th time we've seen this kind of a retraction or correction. I called the 2008 through 10. I called that the Great Correction. This is a mini correction, but we've seen this 7 times now since the war. So we need to understand that it happens, and it's going to continue to happen. So understanding the unique market challenges today, we still have people who have lost recently homes and they can't qualify for whatever, has a bankruptcy. It's not as bad as it was in 2010, 11, and 12, but we're still seeing that. No money for down payment, worried about home values falling. People worry and think about that all the time. Not sure if jobs are safe, stated income or unstable income. There's a lot of that today. Client has 4 finance properties already. Now, this isn't such a big problem as it was in 2010 and 11. Also, this isn't a problem anymore either. Client doesn't have 30% equity in a home they currently have. Used to be if you didn't have 30% equity in a current home you currently have, you couldn't count rent for it. Of course, they got rid of all those rules from the Great Correction. Some people have to purchase in an entity. Maybe they have a judgment against themselves. And there's no way they know they can ever buy a home or property because they have this big judgment against them that will immediately go against the property. And there are a lot of people that never get involved with the real estate industry or real estate buying because of that reason. So we're going to call it we're going to talk about the lease option. It's not the least of options. We're not going to really talk too much about the lease purchase agreement, which is the same thing as a lease option, but a lease purchase agreement isn't an option. So supposedly the buyer has a mandatory requirement to buy the house. whereas a lease option is still an option. Everybody has an option, but I'm not going to talk about the lease purchase contract because pretty clear that's just doesn't have an option. It's just you're going to buy it. It's a lease with an option to purchase. So really important you talk about the benefits to the buyer and the benefits to the seller. This is where it all comes through. So when you're talking to a seller or a buyer, here's the truth that you need to understand. A confused mind will always say what?
No.
It'll always say no. So your job in your real estate is to solve problems. But if you solve a problem by confusing the buyer or the seller, then you're not going to go anywhere. And these things can be confusing if you're not careful on how you explain them. So you wouldn't explain necessarily all the benefits to the buyer, only the benefits that you believe are going to be big for the buyer in this case. You might not explain all the benefits to the seller, but only the benefits that you believe are going to be big for the seller. And we'll go through how I make these offers, because I've done this as well as an investor, as well as teaching it to real estate agents who work through the CAR program and the CAR contracts and all that. So there's kind of different ways to work with this. As an investor, if you're a real estate agent, I hope you're an investor. We all should be real estate investors in some kind if you're in real estate. So anyways, let's go on. Benefit to the buyer, very little down payment. Now remember, there's no deposit in the lease option. It's a down payment. You don't get it back. But how much down payment is necessary? And this is where I differ from some people who teach this. There has to be, in my opinion, there has to be enough down payment to pay commissions. And that's the perfect situation anyways, that the buyer has to have enough down payment so that the seller can pay commissions. The buyer's not paying the commissions, but the seller's paying the commission with the down payment that the buyer puts down. But that still can be significantly lower than any type of many loans. Jumbo, no problem. In fact, there's no different program. It's jumbo product. Doesn't matter how high this goes. Doesn't matter if it's raw land or single family residence or commercial property. None of that makes any difference. There's no program differences if you're talking about jumbo products. Bad credit, but has the capacity. If it's an option to buy, not an absolute, that's kind of cool. If the value is considerably higher when you exercise your option, you're stepping into some equity. If the value is considerably lower, you can extend your option. You always want that as an option so you don't lose your money. There's lots of things to put in place to make sure that the buyer and the seller is safe and protected. And we'll talk more about that as we go on. So if the value is lower, they can extend their option or walk away, just like a purchase, just like a regular loan purchase. They can extend, their situation, try to refinance it, or they can ask for an extension or some kind of modification, or they can simply walk away and allow a foreclosure to happen. And that's really no difference in this particular situation. It can be tax deductible if the property, if it's properly structured. In other words, the down payment. It can be sublet if necessary, if the contract allows. Well, as an investor, I would always make sure the contract allows me to sublet it. The name is not on title, so if someone's going through a divorce or a lawsuit or anything going on, maybe they're facing prison, they can still buy a property, and their name's not going to be on title if they put it straight into a AITD, straight into a trust of some type or of an LLC. So I call it security through obscurity. Can record the option if done properly. You're always going to use title and escrow, and you're always going to record what you have to record to protect the buyer and the seller. You can obtain title insurance and use escrow. That's not really an option. If you're representing people, you're going to use title insurance and an escrow company to protect yourself and make sure everything's done right. Title won't let you mess this up. So if you put something in the contract that isn't right, it's not going to work. In a lease option, all-inclusive trustee land contract, title's going to figure that out pretty soon, and they're going to let you know that, hey, we're going to have to change something, and you're going to do an addendum to the contract to make it work so title will insure the loan or insure the transaction. Does that make sense? Say
All right.
all right. So Next thing is interest can be willed. The interest to the property can be willed to anyone. Now, this is really important. If you buy a house and on a regular loan, you can will that to someone else. Of course, they have to make the mortgage payments. Hopefully there's some life insurance. They get to pay off the mortgage and then they get to keep the house. Same thing with this on a lease option. You can will that as an inheritable right to someone else. If your family didn't know you had this property and you stop making the lease payments, you're going to lose your down payment and everything else, and the family's out of luck. But if you will that in a will or a living trust or whatever, they'll actually be able to take over the lease payments, possibly step into some big equity, or even turn around and put it on the market and sell it. Yes, you do not have to be the owner of the house to be able to sell it if the lease option is structured. So lease option is the same as option to buy is the same as the option to sell. So you can actually exercise your option to sell, to buy at the same time you sell it and sell the property. You then owe the seller what you agreed to pay them, and you get the difference. You never had title ownership. Does that make sense?
It does.
It's really cool, really cool when it comes to investing. In fact, there was a time when this is all I did. I thought it was the coolest thing in the world. When rates did go really low and I was able to qualify, yeah, why not? But I mean, now it makes sense even more than ever.
When I was going to tell you, Steve, when I go over the benefits, it almost is like I'm making them up. I'm so glad that you wrote them.
Oh yeah, no, it's awesome. And this is all going to be, by the way, this whole program is available to all of your students. It's free, it doesn't cost you anything. I will ask you to sign up for my One Bite at a Time show, which is similar to Mary Jane, as far as I share information and small bites of information. And I have workshops that are available. They're all for free. There's no cost to any of them. And of course, my goal is to build relationships. That's it. Another possible benefit to the buyer is property tax. I use this example all the time. Let's say the guy's going to buy a house on the ocean front, or lakefront property or something like that, and the family's owned it in their family for 60 years. Do you really want title to transfer? No, not no, but heck no. You want a lease option for how long? For as long as you want to keep the property. If you're going to stay in that or have that property for 20 years, you want a lease option for 20 years. It's a lot easier to pay that lease payment. You're still controlling the property. You've got an agreed upon price and you're paying a lease payment, but you don't have that huge new property tax it would be if you bought it and transferred title. This is huge, guys. Huge. Does that make sense?
Does.
Contract could include the assumption of the existing loan. Now be careful, but this is big. Yes, it could include an all-inclusive trustee. Now, again, the more moving parts you have, the more possibility of confusing people. So this is not you can learn everything about these things, but it's really a talent to be able to judge your client, whether it is a buyer or a seller, and help them get to where they need to go to make a good decision, a decision that makes sense. They need to understand everything. We're not talking about taking advantage of anybody or putting anybody at risk. We're not trying to convince somebody of something that isn't true. That's not what it is at all. This is solving a problem, giving all the risks and all the things we can do to mitigate those risks and protect both the buyer and the seller.
I wanted to mention as well that part of the reason I asked you to break this down and do lease options first is because they're somewhat more familiar to the crowd. For one thing, might feel like they have less risk, if you want to call it that, that they haven't taken on the mortgage yet, that they're still in a tenant situation, even though they have. More importantly, the reason I asked that is because the benefits are virtually identical. There are some additional ones. But as far as choosing your property and deciding which one you're best for, the how to do's that he's going over are almost exactly the same.
That's why I start with a lease option. And my belief is if somebody can fully understand the lease option and all of its benefits to buyers and sellers and all the things that they can do to protect their buyer and the seller, it's not without risk, but neither is getting a loan from a mortgage company and buying a house. That's not without risk either. But I don't believe a lease option or all-inclusive trust deed or land contracts is any more risk at all. In fact, it might be less risk in many situations, as long as the buyer understands.
I agree with you totally. I more of a mental load, I think is what I meant for people who are new to the options here.
And let's go with the benefits to the seller. I'm kind of going through this quickly because we don't have that much time. The workshop that I have is all inclusive, detailed out. It goes over many case scenarios, but I'm only going to go through one case scenario today after we do this benefits to the seller. So down payment can be considerable versus a deposit, obviously. Now, there are a lot of people out there that don't have a problem having money. They have money and they can put a large down payment down. The bigger the down payment, the more likely the seller is going to say yes. So there normally has to be a down payment. And I always say it's got to be at least enough to pay the commissions to the realtors, because realtors shouldn't get paid, 3 years from now when they exercise their options, because 60% of the people don't exercise their option. You do all the work up front. There should be, I know Mary Jane has a little difference there. I mean, you have a chance of a commission in the future if you structured a little different. But in my own personal world, my own personal situation, I wouldn't even consider anything unless the realtors are getting paid immediately for their work and their risk. And you take risk just like you do in any type of a transaction.
As long as we record the option, the commissions can be paid.
Okay. Oh, yes. Everything's got to be done recorded. In my opinion. Now, if you're an investor and you want to do something different, and you're not using real estate agents because you are the investor and you're the real estate agent, now you start having a little fun because you can do all kinds of things there, and nothing's illegal. I'm not talking about that, but I mean, title and escrow options, certain things are options. Anyways, so down payment can be considerably higher versus a deposit. I've seen people put down as much as 50% down payment, because once they know the problem for the seller, or if you know the problem, it's really important to know the seller's problems. If the seller owes a certain amount and needs to get a certain amount out, I'd find out how much the seller would get out if they sold it on a standard mortgage finance purchase, and find out how much the seller's going to actually get in their hand. Because if you can give them more than that, well, then you just made the deal. If you can give them more than they would have gotten on a standard, sell it to somebody, they get a loan and buy it. And this way is you're going to give them more in their pocket, even if it's $10,000 more, and you can mitigate their risk. You're going to make a deal here. Anyways, down payment is.
We've been teaching the students so far to take the list price minus the mortgage face value, and that will give you some idea of what their net is before commissions and all.
Sure,
so
absolutely. I can do that right now. I mean, I can do so much of this in my head as
Yes.
a real estate investor. I can do things, deal structuring in my head. And, well, what is 96% or 95%? I'm calculating commissions. And, anyways, down payment is non-taxable until the option is exercised. Well, if you get a $50,000 down payment, and that's all you were going to get out of this house, and you're selling an investment property, and you're going to pay tax on that $50,000, but in this way, you're not going to pay tax for 3, 4, 5 years after you've retired. That can make a big difference. How about no landlord-tenant relationship? The buyer doesn't call you to fix something. They're going to fix it themselves. It's in the contract. It's very clear. No landlord-tenant relationship. You can get more than rent, especially with rent credit. So you can get more than rent every time with these than you could rent it out for on a regular basis. Of course, you can do anything you want with it, but you can typically get more than rent. Some report 60% of people with these products don't actually buy for whatever reason. It's an option. So maybe it makes sense for them to choose not to buy it. Happens all the time. Maybe they don't understand it later on, something goes bad between them or whatever, but 60% people don't buy. That means the seller gets to sell it again for more money. The seller can keep the deposit and all the rent credit payments. Easier to qualify for new loans. In other words, if I sell a house on a lease option and I have the lease option, I can do that differently when I'm going to qualify for a loan. The way my new lender is going to look at the lease option is different than a rent. So understand that. Most people don't know anything about that.
Do they, is there a formula for that? We've been hearing they can claim 75% or.
If it's done right, in many cases, it's 100%. They just take it out of the equation. Depending upon the product you're using and how you're doing it, it's just out of the equation. So some people say, well, you get if it's less than 2 years, it's not on your tax returns, you get 75%. And some people say that if it's on your tax returns, you get to calculate the rental income. Well, you don't have that same problem. You don't have any expenses. So you can write off the interest, you can write off the deductions, but you have to take the full income from the rent, which is higher than normal. So it's normally going to be calculated as 100% to wash. Whatever the mortgage is underneath it, that's what it's going to be considered your income. It's not always that case. That's the case, but it's much more than you think it is than a regular standard. I own a rental property and I bought it a year ago.
I had that question like 5 times in a week, so I wanted to make sure what the answer was.
Easier to qualify for no loans, faster closings. You can close as fast as you want. Now, here again, sometimes people feel rushed. So a 30-day closing might still not be a bad idea, just if you don't want a seller or a buyer to feel rushed. When people get rushed, they get confused or they think they're being taken advantage of. But in reality, you can close as fast as it takes title and escrow to do their job. I mean, literally a few days. Sell home for a higher sales price. You can always sell the home for a higher sales price. So every time you can sell the home for a higher sales price. And I'll go through that a little bit more in the case study that I show. Benefits to the agents, faster closings, no mortgage you have to deal with. I'm in the mortgage business, but wouldn't it be nice not to have to deal with mortgage lenders? Oh my God, could that be cool? No appraisal necessary. That doesn't mean they can't get one, but no appraisal necessary. No sudden surprises with lenders at the end. Programs don't change overnight. Remember that time during the Great Correction when programs were just changing in the middle of stride. More closings, target people who lost or are losing their homes. I think you mentioned, obviously, great opportunity. Why wouldn't you target people who have been listed for a long period of time and they haven't sold their home? Expired listings. It's a different type of opportunity than most people think of calling expired listings, and they're thinking like, why would I be able to sell the house when somebody else couldn't? Well, that's because somebody else doesn't understand alternative purchase options, and you're going to give the seller more money in their pocket, and you're going to show them how to mitigate the risk of that. Faster closings or easier closings can get paid in full or partial at close. Now, I believe real estate agents should all get paid in full, but Mary Jane knows it's not a perfect world. And if you can get at least partial paid and partial 3 years from now, at least you're getting paid something.
Well, for agents that I have on here who are trying it on their own, they can wipe away their commission and pay one agent, and that agent's, or have that agent take a portion of yours and increase the amount of commission that the listing agent was going to get. Or waive your commission altogether to make it the money.
Yeah, deal structuring. You got to be able to think on your feet. And the more you do this, the faster you'll be able to think on your feet. And when you're talking to a buyer, you go see a house and you're talking to the listing agent, the buyer wants to make an offer on the house, you're talking to the listing agent, you'll be asking that listing agent questions that you would never ask if you just had a standard buyer with a 720 FICO score and 20% down and they're getting their own mortgage. But once you find out certain things, and listing agents are sometimes happy to tell you everything, and once you know the problems for the seller and you can help solve those problems, if you can solve the problem for your buyer and solve the problem for the seller, you got a deal. You can get paid monthly too. Now, I don't know, you'd have to do the right thing with your broker and everything, but instead of getting paid some now and some 3 years from now, you can get paid some now and some on a monthly payment. That's possible too. More opportunities, can sell properties for more money. Home sitting around, not selling are great opportunities. Benefits to the mortgage professional. Well, okay, none. However, I do make a lot of new friends. I counsel this all the time. People have always asked me what I would charge to help a deal. I don't charge anything if I just talk to somebody and I help a deal. But if somebody wanted me to get involved and talk to the seller and the seller's agent and talk to the buyer and the buyer's agent and help them understand the benefits, because maybe the real estate agent doesn't know enough. And if that deal closes, I'll charge 1%. because I'm giving advice. Anyways, but I don't just, I mean, I'll answer all of your questions all day long, but if it means me getting involved with the buyer and client, I guess I can charge 1%.
I've noted that for the record, though. Now you're in trouble.
Yeah, buyer, you can buy me lunch, you know, I'll help out with a deal and buy me lunch. I work with the client with the home club to ensure buyers are ready to follow through with their purchase. So obviously you still want a lender to look at them to be determine whether this person is going to be able to exercise their option, or if there's another plan, an exit strategy of the lease option. So you still want a lender to be involved, and I'm happy to do that. Even though I'm not getting paid, I'm making a relationship with the real estate agent, and I'm also making a relationship with the client, and I'm going to keep that relationship. That's my job. It's called follow-up. And then when they get ready to exercise their option, maybe I'm even going to touch base with them. I put them in a system, and it'll actually send them out emails talking about different things. Maybe they're in credit repair or whatever. And every once in a while, it'll send me a task to call them and find out how they're doing on the program. And if they're not doing so well, I can call the agent. We can talk about it. We can make some adjustments so that we just don't go the end of the 3 years and the guy didn't do anything and his credit is still screwed up. So that's Steph, and I call it my home club, to get to the position where we build a map, so to speak, to help somebody get ready to be able to exercise their option if that's the only chance or what their plan is. I can facilitate the process through counseling of the buyer and the seller. I talked about that. No legal advice. I'll always refer somebody to an attorney. But now this is really important. I know there's a couple of attorneys on this video, Zoom call. Maybe he can pipe up here. Here's what I found. You know, I went to John Giardinelli to get this reviewed, and he admitted to me back then, this was years ago. He admitted to me back then, he said, I don't know nothing about all-inclusive trust deeds. And I said, okay, so that means you're going to do some research. He said, yeah, I guess I'm going to have to do some research. So all the things that I said in my workshop, some of the things were a little bit sketchy in the eyes of an attorney. So he would review all this, and, you know, he came back and he agreed with me on every single point. But most attorneys don't know anything about this, and a confused mind will always say no. They'll tell their client, don't do it, don't get involved with it. So that's where you're trying to mitigate that process too. Maybe there's an attorney you can recommend they go talk to. That might be a good thing, so that they get the right advice. That will happen a lot of the times. But you know, just like the due on sales clause. Most attorneys will just look at certain things and they'll say, yeah, you can't do that because they can call the note due. They don't know any different. And we talk about that during the all-inclusive trust deed workshop.
Yeah, I think that the type of attorney you're looking for, you need a real property attorney who regularly looks at car forms and just regularly looks at contracts like this. And then you need a trust and estates attorney to advise about the due on sale clause. And also, it's very interesting what you're talking about as far as assigning your interest in the lease option, and whether you can use a will or a trust. I'll talk about that at the end if you don't mind.
Sure, no, that's great. I came up with all, you know, I've done this workshop hundreds of times in front of thousands of agents, and I've gotten every question in the world. And I've done research. I've hired attorneys to do research if I didn't know something. It was a long process. In fact, I was already had the workshop all set up. I was going to be selling this workshop, and rates never went up. I expected rates to go up, and so now they're going up. It's still not for sale, although I probably will sell it to real estate agents outside of California. That's something we're going to be doing probably pretty soon. Anyway, let's go through a quick case study. How much time do we have so we have time for questions, Mary Jane?
Yeah, you're still 20 minutes.
Okay, this is a quick case study, and that's it. Sally Seller is trying to sell her home. She owes $350,000 on it, and the house is worth $325,000. She has a 30-year fixed rate VA mortgage at 5.5%. That she got 5 years ago when she purchased it for $350,000. She has to move because she currently got a divorce and can't afford the payments. She simply doesn't want to walk away and ruin her credit. She's going to move in with her mom. She has no money in the bank and has 3 kids. Her payment is $2,900. Okay, that's a typical problem, right? Would everybody say that is the typical problem you might run into? Now, Billy and Betsy Buyer, they recently lost their home because they didn't have mortgage planner to get the right advice to purchase too much house on a ninja loan. That was back in no income, no assets,
Yeah.
liar loan. He has the capacity to pay a monthly payment of $3,000 a month, but no chance of getting a loan. Billy and Betsy have been feeling destroyed since they lost their home and wish they had received better advice. Billy and Betsy don't know that there's might be a program out there that can help them. Since they stopped making payments, they have saved almost $30,000. And that's true in a foreclosure. A lot of times people stop making payments and they save that money up and they've got money. And that money is going to be used for a down payment. That's in that case. But there's 100 different examples out there, maybe 1,000 examples of a buyer in need of being able to buy a house, but simply thinks he cannot buy a house. In fact, I believe the ones that believe they can't buy a house is more likely to be able to buy than the ones that believe that they have God's given right to buy a house and they don't, they can't qualify. Anyway, Sally Seller considers renting a home, but she could only get about $2,000 a month. She's considering renting the home, but she can only get about $2,000 a month, and if she's lucky, and there would be many homes on the market. Billy and Betsy Buyer, they don't want to rent, but feel that they have no choice. Sally Seller contacts Randy the realtor to ask what her options are. Randy recently went to a seminar where he learned how to do this, and he takes the listing no one else would take. It's upside down. Most people wouldn't take that listing. Then Billy and Betsy get something in the mail that tells them that there might be a program to help them right now. You can call it whatever you want to call it. Rent to own, lease options, seller financing. They're all a good word for lease options and all-inclusive trust deeds. They're interchangeable. The correct words are lease options, lease purchase agreements, AITDs, and land contracts. The name at the bottom of the flyer is Randy, so they give Randy a call. Randy explains to buyers his alternative purchase options that very few realtors understand, and he can help the buyers right now buy their house and solve their problem. Randy takes Billy and Betsy to go see several homes, including Sally Seller. Billy and Betsy love the home and would like to buy it. They ask Randy to put in an offer. Randy puts together an offer and calls Sally the next day. Sally gets a call from Randy telling her that there's a possible offer coming in. Sally's excited and amazed. She had amazing Mandy for a long time as a real estate agent, and she couldn't get any offers, and nobody would even see the house. She can't wait to meet Randy to discuss the offer. Here's the offer. Now, it might stray from what your broker wants you to do. But as an investor, I always found that if I attacked a buyer or seller with a CAR form, I didn't get very far. Way too confusing, because now they're reading it because we're talking about a confusing thing. So I always use a letter of intent. And I did check with the CAR attorney one time, and he said they're fine. You can use a letter of intent. You still got to back it up with the proper CAR forms.
I want to comment there that one of the programs that I've been working on for a client, they did get a very basic generic letter of intent. It was from two just young. In fact, when I looked them up on Facebook, they graduated high school in like 2015. And they could have made it look so much better. And even with it unsigned and looking like they took it right off of Google, they got a call on it because the seller wanted to know, well, what's this about? Can I get it done? So even a bad letter is better than no letter whatsoever.
I'm glad to hear that you agree with the letter of intent.
No, I do.
Some of the managers I've talked to don't allow that, but I'm like, no, you're always going to do a full CAR form with all the seller financing forms and everything properly done according to the broker you work for, and they're going to check it out. It's all going to be right. But the letter of intent is designed to stop the confusion. So first of all, go ahead.
You want to finish my thought? The reason that the buyer that I'm helping that we're shopping now, or two buyers that we're shopping now, that we decided to go to the CAR form was we're finding that agents don't feel an obligation to tell about the letter of intent, whereas they have an obligation to show them offers. We were also able to add in the proof of funds and things that would be requested in a car. We also wrote a cover letter. We gave them proof of funds. We offered a background check. We sent a recently run credit. I wanted to shut down as many ways as I could think of for the agent who's confused and saying no, to get past the agent to the homeowner themselves.
Right. If the agent's not confused, they're going to sell it to the seller. So let me go on with this letter of intent. You know, it's going to be so simple. The sales price is going to be $375,000. It's more than what it's worth. $375,000 lease option to buy for 3 years with 2 possible extensions if all payments are made within 5 days of the due date. That's going to make sure that those payments are paid on time.
Options, I love that.
Lease payment is $2,500 a month plus $500 a month in rent credit. Now the seller is getting enough to make sure it's covered. The payment's covered. $30,000 lease option down payment. Why? Because that's how much they have. When people ask me as a seller, how much do I want for a down payment? My answer was always the same. How much do you have? Because that's how much I want. So $30,000 for a down payment, seller to allow buyer to assume existing loan when option is exercised. Now, maybe you're not going to put that on there, but I didn't have any problem explaining that. But again, when you add too many moving parts when you're new, you might not put that there. But it is a good option to put in there in case something goes wrong for your buyer and you're still not able to exercise their option. They could then exercise the option with the assuming the existing loan and an all-inclusive trustee. The buyer to repair everything that needs to be repaired unless insurance will cover that repair. At the pre-close, buyer and seller will share all costs. Now understand there's 2 closes here, same escrow company, 2 closes. You're going to open escrow, you're going to close escrow, and escrow is going to immediately reopen escrow, and it's just going to sit there for 3-4 years. Or maybe they're not going to reopen escrow. They're just going to keep that file for 3 or 4 years until the option is exercised and they still have their documentation. Does that make sense?
What do you think about picking up their title and escrow costs as a term? Because it's such a small amount of.
Sure.
Yeah.
Sure, absolutely. You could also get involved with third-party trustees, which you mentioned, where if the buyer has got that weird feeling, I'm afraid that we're going to make this payment and the seller is not going to be making his mortgage payment. Well, then eliminate that with a third-party trustee. You know,
I
and
have that as well.
you might also be added to the insurance as an additional additionally insured. At the final close, the buyer and seller will share all costs. You put all this in there. Escrow and title are going to be used and paid for. Home warranty still paid for by the seller. All necessary car forms will be used. Option to be recorded. That's not saying we have an option to record. The option will be recorded, and et cetera, et cetera. Just remember the car forms, a car approved purchase agreement, and all required documents to be drawn up, you know, to match this letter within 5 days of acceptance. Now, Mary Jane said something was cool. You could actually make the offer with the car forms and put this letter on top so they can use the letter to understand the simplicity, and then they got the car form that they're familiar with underneath it. That's okay. That might work too.
Good idea.
So Billy and Betsy sit listening wide-eyed and very interested. Betsy is all excited, but Billy sits back, folds his arms, and start firing questions. Okay, these are the 7 questions that you will have to learn how to answer. You should learn to answer them so it's rolling off your tongue. Why would I pay more for the house than what it's worth today? Well, that's pretty simple. You're going to be paying less for the house than what it's worth when you exercise your option. Very likely, even with a 5% appreciation. We'll talk about that in a minute. What if the owner doesn't make the payment? We've got that answer. What if I don't qualify for a loan in 3 to 5 years? We solved that problem with ways to mitigate that risk. What if I don't want to buy then? Okay, we'll talk about that. Is this legal? I don't give legal advice, talk to your attorney, but here's one I'd recommend for you. Here's how am I protected? Can I lose my 30,000? Of course you can, but if you put a down payment down on a house, you could lose that too in a regular standard purchase. What if the house isn't worth that much in 3 to 5 years? Those are the 7. There are no other real questions. There's derivatives of those 7, but those are the 7 questions. Like I said, derivatives, they might say the same, ask the same question in a very different manner, but it's the same 7 questions. Does that make sense?
It does.
All right. So obviously, first bet, Billy and Betsy are buying the house for more than what it's worth now, but very likely less than what it's going to be worth when they exercise the option. When they buy the house, should be worth $434,000 based upon just, that changed that to 5. It's actually 5% appreciation. You could change it to 4 and they're still going to be buying it for less than what it's worth now. But what if you don't buy? Well, you're going to be trying to buy 3, 4, 5 years from now anyways. The house is going to be worth $434. You're going to pay $434 for a house then. Why wouldn't you rather pay $375? So it's easy to answer these questions when you really think about it. Second, the seller is allowing them to assume the mortgage already in place. This will save the buyers bunches of dough in closing costs and about $100,000 in interest costs over the rest of the term of the loan. If you can get that in there, that's a really cool way to overcome a lot of these risks. Third, they don't have to buy the property. If values drop, they can walk away, or they can ask the seller for an extension. They don't have to walk away and lose their 30,000. They just say, all right, the house isn't worth what we agreed to pay for it. By the way, that's another thing. I don't ever recommend doing a lease option, anything other than with a agreed upon sales price at the time of close, because you don't want to have it open and say you have an option to buy it, but we're going to do an appraisal then. That's just not right. I think you should do agreed upon price. You got to have a benefit to the buyer as well as a benefit to the seller. If the seller says, well, I want to determine the price when they exercise their option and walk away, because the seller is not being willing to negotiate. They want the world now and they want the world later. Sometimes you just can't win. So if the property drops, you can walk away, or you can exercise, or you can extend your option. Fourth, the buyers will have up to 5 years to work on improving their credit. And if they work with Randy's good friend and mortgage planner, I know that guy, we'll make sure and then when we do exercise the option, the $30,000 you put down is going to count towards your down payment for that loan. And so it's just a matter of putting together the rest in a loan. Okay. Easy stuff to answer once you think about it. Fifth, the buyers can obtain title insurance. The sellers are going to obtain title insurance as well. Use escrow and record their option agreement. This would prevent the seller from doing anything like reselling the property to somebody else before preventing you from exercising your option. Number 6, although it would be highly unlikely for the seller would stop making payments, use a third-party trustee. I have a couple that I can recommend people. One of them is Zenith. It's in Carlsbad. I use that quite a few times, but Mary Jane as an escrow officer, I mean, all this is a third-party trustee is normally an escrow company, and they can set up their own third-party trusteeship and do it that way. Maybe that's something Mary Jane's going to consider. I've considered that many times. I have a broker's license as well, so something I thought I would do if once rates went up and these types of products have become more and more exciting. Sally sits back listening to Randy's offer and has a few more questions of her own. Now, these are the questions that come from the seller. Okay, these are the only questions you get from the seller. Sally is selling the house for more than what it's worth now, but likely less than what it's worth in 5 years. A win-win. I don't know what happened to the questions. Anyways, you're talking to Sally, you're answering Sally's same questions. Similar questions. Second, Sally is getting $30,000. One of her questions is going to be, how do I pay my commissions? You're getting $30,000 as an option down payment. You're going to pay your commissions right out of that. She says, yeah, but then I don't have any money left over. Well, when they do exercise their option, you're going to get $25,000 you weren't going to get before. So, and maybe the down payment can be $80,000. She can get her $50,000 or 20, whatever down money out of it. She can get her $25,000, maybe maybe do 55,000 down payment, and she gets the money she was going to hope to, wasn't going to get on the other product, and there's enough money for commissions. Third, what's the down? What are the options? Not selling the house is far more dangerous for Sally, since she can't make the payments, will likely lose the house. Fourth, the ability to extend the option if necessary beyond the 3 years is dependent upon the buyer making payments on time. Fifth, the buyers are going to make any necessary repairs so she doesn't have to anything that she has to worry about. Sixth, she cash flows now. In fact, her payments are only $2,900, including tax and insurance, and she's collecting $3,000 a month. Seventh, in 5 years, the home will likely be worth 400. Change that. Change that to 5%. If it was a 7% appreciation, it would be $455,000 based upon 7%, or $435 based upon 5%. If the buyers don't buy, Sally can simply resell it again. 8, in 5 years, the balance on Sally's home will be $300,000 now. So when she does resell it, she's going to have more money put in her bank, in her pocket. Everybody lives happily ever after. I have this cool picture of happily ever after.
I just saw this not too long ago. It's funny.
Here's a sign that I would give to people, and I used myself many cases, lease with an option to buy. And I put the number there, and it had a recording explaining the whole thing to buyers. And agents would use this sign along with their normal sign that they put in the ground, and people would call, listen to this recording, they call on the sign. And the recording is you explaining this option in a way that when you are at your best. That's the best thing about recorded messages. You are at your best answering all their questions that they're going to have, because they have 7 questions. You can answer all those questions in your recorded message and help the buyer decide, okay, now I'm going to call the real estate agent on the sign. Does that make sense? Say,
Uh-huh.
Any questions? That's the end of my little ditty, my little dog and pony show.
Steve, that was great. I look forward to adding the, you pretty much covered what's going to happen on the next one, but I'm excited for people to be able to discuss these as separate entities with common grounds. I think Andrew wanted to say something. Andrew, did you have a point to make?
Yeah, thank you for that. I have a comment and then a question. The comment is—
Are you the attorney?
Yes, I'm the attorney. Yeah.
Oh, here it comes.
Well, so the comment is, I thought it was really interesting about how you can will the leasehold interest, and that seems to me to make sense. The only concern I have with that is I wouldn't want to rely on a will, because if we're relying on a will, we're going to probate court. It could take 6 to 8 months to have a family member appointed.
Oh, absolutely. It's just a willable in interest. So, you could use a family living trust or whatever you would recommend to them.
Yeah, so my recommendation is they should create a trust, but more than that, your trust attorney should create a specific assignment, specifically assigning the leasehold interest into the trust so we know it's safely in there. That makes sense. I just wanted to make sure that was come across. A trust.
And here's the cool thing. Let's just say the buyer, they come time to exercise their option, and they need to buy this house, and their option is ending. And let's just say they're still going through a divorce. They can't take title to this property.
Mm-hmm.
Now, legally, they need to tell the divorce attorney about this value, because there's a value there. But let's just say they have a big judgment against them. And if they took title instantly, it would hook up to the house. So instead of exercising their option and buying the house, exercise their option and sell the house, and have the proceeds go into a LLC or something else. I mean, There's got to be ways now. I don't know any of the legal mumbo jumbo there, but there's got to be a way to really help a buyer who's got in that kind of a situation. What do you think?
If you're a smart agent and you're picking these up as an investment, these are also available for 1031 tax deferred exchanges as well. You just can't live in them. But they can be picked up, and 1031s held in a trust, bought and sold in a trust can be.
Yeah. And you know how in a regular purchase deal, it has to be an individual, whereas these deals can be a trust or a entity. It doesn't have to be you, the individual, doing this option to purchase. It could be an entity. And so if the entity isn't you and you have a big lien against you that would be found by title when they, getting ready to cut you a big check, you can do it within an entity. You could do it with someone else that you just trust.
1031s require you to take title and leave title the same way. So you have to know, if you're intending to 1031, you have to know which way you're coming out as well, because you have to go in at the same exact vesting.
Any other questions?
Well, I'd have to think through everything that you just said, but I wanted to also ask you, why is it that 60% of the buyers don't actually move forward on the purchase of the house? Why do you find that?
Well, I use that as a very conservative choice. There was a report online. I just needed to know what percentage of people actually follow through with the lease option. But that's also counting people that aren't doing it right. And I don't know for what reasons they don't do it. They don't use escrow, don't do title, they're doing it with a friend or family member or whatever. That includes everybody. And so I think it's a much higher level. The more down payment you put down, the more likelihood you're going to exercise your option. But there was a report somewhere I read that better than 60% of the people that enter a lease option don't actually exercise their option, which to me would be great for a seller. It's good for me. But again, if I had a buyer buying my home and they put $50,000 down payment, it's non-refundable. They're probably going to exercise their option, or they're going to exercise their option and sell it if they understand it at all.
I wanted to mention that, like everything else in life, 3 years down the road, one of you has passed, your job situation is completely different, you've become ill.
That happens a lot too, where the
All
husband
the-
understood it, but the wife doesn't, and the husband passes away and it just doesn't get paid.
COVID comes along and you want to move to Tennessee where your family is, that kind of thing. I want to stop for just 1 second and not only give Tommy a shout out, but one of the students on this class has been watching a lot of videos and bringing me great questions. And that person that they're listening to is pitching without title insurance. And we will not be recommending transactions without title insurance, and not just because we like money. I tell people that the thing you need to know is title insurance is the only kind of insurance that insures the past. And so if you take on uninsured property, untitled insured property, you have virtually married them. And this is a risk that is too far. You don't want to find out that they've had a car wreck or their kid was drunk driving and now they're being sued, and they're all that sort of stuff. All of that will attach to the property if it hasn't been transferred. So if in the case of a lease option, I just want to let you know, we will not be recommending any method that doesn't include title insurance. Tom, any thoughts on that?
Yeah, I mean, you're jeopardizing 100% of every dollar that you put into that lease option, and then some, right? So 100% of everything you just said, I agree with.
And when you join them, I would assume a lawyer would have, in some cases, the potential of getting into your pocket, because you've not only you've married them in both directions. You've taken on their problems and they have potentially gained your benefits from people who don't have those kinds of problems in their life. So title insurance is not an if, and, or but in any class I will be.
I got a call about 4 years ago from a very remedial investor that did a lease option on their own with no title insurance. And then the seller, the owner of the property, got in a little bit of hot water and ended up in court. And the investor that went in for the lease option with them ended up being drugged into that, because the way that the contract that they had designed was written brought them together as a financial asset to the property, right?
Yep.
And you got to be careful when you draw up your own contracts and you don't have an attorney or a legal entity of some sort look at that contract to make sure that's protecting you from certain things.
A more common example of that is I have a couple times a year, a parent will come to me and say that they put money down in a house and now the kid can't carry it and they want to deed the house back to themselves, the child's portion back to themselves. We get title insurance for that situation as well, because we need to close the door between the parents and the child for the exact same reason. We want them insured off the property. So title insurance is a very important part of this conversation.
Well, and the other reason title insurance is important is because I can quit claim my property. I can release my interest to, say, Mary Jane at any time. I don't need title insurance to do that. However, that would be classified as an uninsured deed. So when Mary Jane goes to sell that property, coming from a title perspective, is we have to go back and make sure that all the way from the last insured deed and beyond, that all those transfers up to this time when we are trying to transfer it to the next person was legal, lawful, and done correctly, and there's no encumbersome and nobody with rights to the property. And what if there is? What if I had a judgment on me, right? And I transferred my property after that judgment because I wanted to try and not have to pay it. And I transferred to Mary Jane, and then all of a sudden she goes to sell, and they go, wait a minute, they go back and they find a judgment on me. And they go, nope, he transferred the property after the judgment. We can't transfer that property because that uninsured deed is now linked to that judgment.
Yeah, you don't want to marry, somebody.
You don't want to jeopardize that.
You don't want to. Steve, before we're going to still take some questions. We are going to wrap up the class. We always stay online until you guys begin to disperse. Steve, your information and all that. Oh, you do. You have it in there where people can.
I just put it in the chat. If you want to subscribe to the channel, you get everything for free, and all the workshops, all the shows. And if you want to register for the show so you automatically get it, you can do that. I don't promote any realtors. I don't promote any title and escrow people. So it's a very bland show. It's all about teaching real estate agents what they need to know one bite at a time, because there's so much real estate agents really need to know, and now even more than ever. I mean, a monkey could have done this thing back in 2019.
Right.
And a lot of monkeys did it. It takes a professional now to be in real estate.
Like I said, we are going to conclude the formal part of this show, but we're going to stay on in line and take your questions. So if you are looking, need to move on for your day, please feel free to do so.
Yep.
Anybody have a question about you, Matt? Must have come up with a question for me.
Next week we'll be covering AITD and wraparound loans.
Yes.
So come back same time, same place next week, because you will get some insight on that. So
I also added a March 6th. We're going to have a fourth piece of the series. I'm specifically going to do the forms, the car forms and that. So March 6th will be the last of the series, and it will show in the March schedule. Dana, you popped on, you have a question?
Steve, when you're talking about wraparound loans, I'm saying bridge loans. When you say wraparound, are you talking about bridge loans?
No, bridge loan is if you're buying a house and you haven't sold your house, you can do a bridge loan on the house you're selling in order to be able to buy a new house, put down payment down. That's a bridge loan. And a wraparound is an all-inclusive trust deed. It's the more proper name for a wraparound. All-inclusive trust deed. You're buying something subject to the underlying loan or loans that are on the property, but title is in fact changing. So it's all-inclusive trust deed. And when we do that, I have a lot of fun with the all-inclusive trust deed workshop. And
I think of that's what I'm.
Andrew's going to be doing this when I get done.
That's what I'm shooting. The AITD is what I'm shooting for, even if we back down to a lease option. I am trying for a deed transfer almost always. People are more comfortable with as some sellers have motivations that they want out altogether. Want to talk to the HOA any further, that kind of thing.
So don't miss next week is what we're saying.